Traders, how are you? Marcello, founder of the Day Trading Academy, co-founder of Speed Up Trader. Today, we're going to be talking a little bit about why is Bill Gates selling all his stocks? We have a situation right now where everything's extremely overvalued. This really has to do with the federal governments of the world printing money. And that, in my opinion, has to do with almost 70% of the consumer spending in the United States is almost 70% of the economy. Right? So I think I said it backwards, but you guys understand what I'm saying. So we have a situation where they want to stimulate the economy. What they do is they print the money, they raise the asset values, which means the stock market, which means real estate, and the vast majority of Americans' wealth, including more industrialized nations, things like the UK and most of Europe, especially Western Europe, Australia, Singapore, one or the other. Most of us in the United States have our wealth in the stock market, and then other developing nations, things like Colombia and Brazil, most of their assets are in real estate. So if they go in and they raise these asset values, then people feel rich, right? They feel like they have more money, and then they go out and they spend money. When they go out and spend money, that moves the economy, it moves the market, and then the government looks great because the economy is growing. That's essentially what's happening. Now, one of the things I always told you guys is, especially in the videos that I do in the past, don't pay attention to what the media says, pay attention to what they do. So I don't see anybody reporting, for example, that Bill Gates is selling all of his stock, because if they did, most likely there would be more pressure to the downside. And that's not good for anybody, because then we don't feel as rich anymore. We don't go out and spend as much money. And that being 70% of the economy, we got a problem, right? Now, Bill Gates, third richest man in the world, used to be the richest. He has $130 billion on any given day. He might lose or gain $1 billion, right? And when you have that kind of money, the SEC, which is the Securities and Exchange Commission, requires you to file what's called a 13F. That's basically anybody who has just an overall summary, right? People who have buku amount of money, let's call it $100 million or so, have to report that to the SEC because they want to know what they're buying and selling. And this is actually public information. So you guys can go out and actually research that information. So if we have a look, he actually sold 11 stocks, and not just a little bit or a few percentage points. He actually sold a ton of his holdings, and in some cases he sold all of them. So why is Bill Gates now selling all of his stocks? What, you see what I mean? Now, there's something called smart money. For those of you guys that are new to the channel or maybe are new to the stock market, there's something called smart money, and there's something called, I don't want to say dumb money, but all the rest of us is basically not the smart money, right? Smart money is the hedge funds, Warren Buffett, George Soros, the guys that run the world basically. So they know what's going on. If we pay attention to what they do, there's a reason why they're doing it. Now, considering what's happening now with Bill Gates, I think that we can expect a correction, possibly a crash. I would say probably in May or June of this year. It's really hard to kind of gauge these things because obviously the government is so involved now and they're printing so much money. They can go in and kind of change things. So let's go over what Bill Gates actually did. He sold 11 stocks and only increased his positions in one. Uber Technologies tech company, he sold 100% of his Uber stock. Cornerstone Building Brands, that's real estate. Obviously, real estate is a little bit overvalued as well right now. Boston Properties, 100% he sold. Beyond Meat, which is actually really interesting because remember that the government and all the environmentalists are saying that we should stop eating real meat because it's harming the environment. So it's actually interesting to me why he sold that. Alibaba, huge behemoth. If you don't know Alibaba, it's essentially the Amazon of China. Absolutely huge company. Also a tech company, which would be classified as overvalued. Sold 100% of that. And then we get into some of the fangs. We have Apple. He sold 50% of his holdings in Apple. Amazon, he sold 50% of that. Google, which the parent company is Alphabet, he sold 50% of that. Notice there's two different stock prices here, but we won't get into the details of that. The most important thing is that he sold 50%. And then we have some other things. He sold 27% of Liberty Latin America. Canadian National Railway, which is, part of the National Railway in Canada. And then Berkshire Hathaway, Warren Buffett might not be happy that he sold close to 11% of his stocks in his stock. But 10% is a lot. And then we go back down here, and this is, again, publicly available information. The only stock that he actually increased his position in is this company called Schrödinger, which is a healthcare stock. They use computer simulations to be able to help cure diseases and find mixes of antibiotics and things like that. So you guys know that Bill Gates is really big into healthcare. He's obviously one of the main proponents of putting a chip inside of us and getting the vaccine, so we can't go to the grocery store without getting a vaccine. So not surprised that he's going to go in and actually invest in a healthcare company. But what's most important to me is, why is he selling all these technological companies? And if we go into some of these companies, we'll actually see at the end of this video, I'm going to show you the actual valuation metric that Warren Buffett uses to be able to identify whether the stock market is overvalued or not. And we have a situation now, and this I kind of talked about at some of my in-person events for our traders. 1999, 2000, we had the dot-com bubble, right? We had a hedge fund that collapsed. It's called long-term capital management. This fund was so integrated into the financial system that they couldn't let it fail, right? Because stocks only go up. And so the central bank of the United States, the Fed, they amalgamated a bailout, and essentially the financial system, Wall Street, bailed out this hedge fund. Then in 2008, 2009, we had the financial collapse, where the hedge fund collapsed, Wall Street bailed it out. Then 2008, 2009, we had a Wall Street collapse, the governments bailed it out. And now we're walking into the big government situation where the governments are going to fail. And this, to me, is a way to kind of institute that world government, the government coin, all the digital currencies where, it's going to be on the computer, no more physical money, et cetera, et cetera. So if you notice Google, Alphabet, they've gone up in the last 5 years, almost 181%. Their PE ratio, which I'm going to describe that to you as well, it's a ratio to be able to try to value what the stock is, if it's overvalued, undervalued, at the right price, etc. It's at 3405, which is high. Right? It's more than double what the average is. In the last year or so, you can see that it's gone up over 80%. I mean, we're just talking like buku percentage points. It's just, we're in a never ending bubble right now. Amazon, notice in the last year, it's gone up over 58%. In 5 years, it's gone up over 131%. Notice it was a little bit higher before. Their PE ratio is 75, right? So remember, this is almost triple the amount that Google was. And then we have Apple. Notice Apple, we have a situation where they've gone up 87% in the last year. In the last 5 years, 353%. Notice that was a little bit higher as well. And the PE ratio for them is 33, which is, again, more than double. Now, the PE ratio is essentially the cost of the stock, right? The share price divided by the earnings per share. So whatever the company's earnings are, they take that calculation, and then we have the PE ratio. Now, on average, I'm going to show you this one first. On average, notice that we have an average of about 15 or so. That's been the historical average. Once we get into these bubbles, notice how it swings back and forth. This is the same chart that I just showed you, just a little bit bigger. And notice from all the way back here into 1928, right before the crash, all the way to now, the average, notice, has been between about 10 and 20. It's kind of stayed in there. In 1999, actually, the dot-com bubble actually burst in 2000, March of 2000. Notice here we had a little bit of a dip, and then it went up again, and then we had the big crash, the dot-com crash. Then we walked into the financial crisis of 2008, 2009. Look at the valuations here, just astronomical. And then it came back down into the average. Notice right in between 10 and 20. And now we're right back up. This is from November 2020, so it's a little bit higher now than it was before. Not as high as it was in the dot-com crash, not as high as the financial crisis, but still more than twice what it's supposed to be on average historically. Now, one of the things that's really interesting about that is, and I'm going to read this word for word for you, in the past 3 decades, it has never reached the point leading quickly to either a deep correction or a full-blown recession. So right now we're hovering a little bit above 25. So essentially, what he's saying is anytime we get these overvalued metrics like the PE ratio, we have always had a correction. And I wonder if this is why, for example, Bill Gates is starting to sell all his stocks, because he's not only selling all of his technological stocks, he's also selling his other stocks as well. And the only one he actually increases position in is the healthcare, which is what could see a boom. In a crisis or a crash, not all stocks necessarily go down, but notice he's investing in healthcare, which this is kind of the boom at the moment with the whole coronavirus thing and the vaccines and everything else. So interesting to see that he's sold not just 5% or 10% or 11%. He sold over 100% in many stocks, including a lot of the highly overvalued technological stocks, Uber and Apple and these things. So that's really, really interesting, right? Now, Warren Buffett as well has been stating that he has about $140 billion in cash due to the fact that he can't find anything to buy. Normally, he's a value investor, much like Bill Gates. Not surprisingly, Bill Gates probably learned how to invest this way from Warren Buffett, but he never has had so much cash due to the fact that he can't find value. Right? There's been another reported thing, I believe it was last year in the second quarter. Don't quote me on that. You guys can look it up on Google. But Warren Buffett actually doesn't like to buy his own stock. He's never done it. And because he can't find value on the street, he started doing that because he just can't find value, which is actually interesting. Now, there was a quote that Bill Gates in 2018, they asked him about the crisis and if we're ever going to have another one. And he repeated, in the near future, will we have a financial crisis similar to 2008? And then Gates responded, yes, it's hard to say when, but it's definitely a certainty. So really, really interesting what's happening here. Now, the last thing that I was going to show you guys is the Buffett indicator, which is essentially the market cap to GDP ratio. The market cap is the capitalization of the market, meaning, what the stock is valued at altogether, right? And then divided that by the GDP of the country. So you can see that overall between the yellow line right here and the green line is fair value, meaning that it's priced at where it should be. Anything above the yellow line is overvalued. Anything above this kind of lighter green line is undervalued. Now notice we're kind of hovering in that range, going up a little bit higher and lower. It doesn't go back to 1929, but you can notice in 2008, 2009, it wasn't as overvalued as it was in the dot-com bubble, which is right here, 71% higher than what it was valued at. And now, based on the Buffett indicator, we have a situation where it's even valued at a higher level than what we had in the internet bubble, the dot-com bubble in 1999, which popped in March 20th. So this might be the reason why Gates has decided to go ahead and just get out now, because everything is actually overvalued. I do believe that we're probably going to see a crash. It could be a real large correction, probably March and May or June of this year. Hard to kind of tell exactly the date because obviously, the government can come in, do more of a stimulus. It can actually help. But I think one of the things that might happen is with the new stimulus checks, it might have a reverse effect on the economy. And we just can't continue to go the way that we are. The market can't continue to stay overvalued and continue to go higher and higher, right? It's theoretically, it is possible. It's been happening now for a while, but it's not going to happen forever. So one of the things that I always tell you guys is pay attention to what people do, not what they say. I don't see the news reporting, for example, that Bill Gates has sold 100% of all of these stocks, things like, Uber and Apple and Amazon, even letting go of other stocks as well in the 50 to 27% range. So it's going to be something to watch out for. So keep that in mind. If you maybe are looking for investments, remember this is for educational purposes only. I don't want you guys to go out and just start selling your stocks because you're watching this video, but something to really consider because I do think we're going to have a crash here very soon, most likely in the next few months. So let me know if you guys have any questions. Don't forget to put all your questions there with hashtag #AskMarcello. Don't forget to smash the like button because that is great for the algorithm on YouTube. And we'll see you next time.